You're sitting here right now because somewhere deep down, you know something isn't working. Not your strategy, not your risk management, not the markets themselves. It's something quieter than that. Something you can't quite name. But you feel it every time you hover over that entry button. Every time you close a trade too early. Every time you break your own rules, even though you swore this time would be different. The psychology behind top Forex success isn't what most people think it is. It's not about confidence. It's not about fearlessness. It's not about having ice in your veins while everyone else panics. Those are just stories we tell ourselves because the truth is harder to face. The truth is that the traders who consistently succeed, people like George Soros, Tudor Jones, Stanley Druckenmiller, they've learned to see something most people spend their entire trading careers avoiding. They've learned to see themselves clearly. And that clarity, that brutal honesty about who they are when money is on the line, is what separates them from everyone else. You probably came into trading believing it was about the markets. That if you could just understand price action better, if you could just find the right indicator combination, if you could just learn to read the charts the way the professionals do, then everything would click into place. And maybe for a while, that belief protected you. It gave you something to work, something to blame when things went wrong. But at some point, usually after enough pain, you start to realize that the markets aren't your problem. You are it. That sounds harsh. I know it does. But stay with me here, because this is where everything changes. When I say you are the problem, I don't mean you're broken or incapable or doomed to fail. I mean that every single thing preventing you from trading well lives inside you. Your fear doesn't come from the market. The market is neutral. Your impatience doesn't come from the charts. The charts just move. Your need to be right, your inability to sit in uncertainty, your compulsion to overtrade when you're bored or revenge trade, when you're angry, none of that comes from outside. It all comes from you. And here's the thing, most people never understand. That's actually good news. Because if the problem is out there, in the markets, in the complexity of global economics, in the unpredictability of price movements, then you're helpless. But if the problem is in here, in your own psychology, then you can actually do something about it. You can change, not overnight, but you can change. So let's talk about what's really happening inside you when you trade. Let's talk about the psychology that either lifts you up or tears you down every single day. And let's be honest about it, in a way that maybe you haven't been before. Most traders lose money because they're not actually trading the markets. They're trading their emotions. They're trading their need for validation. They're trading their fear of missing out or their terror of being wrong. They're trading their childhood wounds about not being good enough. They're trading their desperate hope that this one trade will finally prove they're smart, capable, worthy, and the markets, completely indifferent to all of that, just take their money. The top traders, the ones who've made it through to the other side, they've learned something crucial. They've learned that trading isn't a performance. It's not a place to prove yourself. It's not therapy. It's not a game where you win your self-worth back. It's simply a probabilistic exercise in which you execute a process over and over, accept whatever outcomes occur, and let the edge play out over time. That's it. But to really do that consistently, you have to face parts of yourself that most people would rather pretend don't exist. Let's start with fear. Not the obvious fear of losing money, though that's real too. I'm talking about the deeper fear underneath it. The fear that if you really try, if you really commit, if you really follow your plan perfectly and you still fail, then maybe you're just not good enough. Maybe you don't have what it takes. That fear keeps you from fully engaging with your process. It keeps you hedging, second-guessing, breaking your rules at the exact moment they matter most. Because if you never really try, you never really fail. You can always tell yourself it was just bad luck, or you weren't following your plan anyway, or the market was manipulated. You can preserve the fantasy that you could succeed if you really wanted to, while never actually putting that belief to the test. Top traders have killed that fantasy. George Soros once said that it's not whether you're right or wrong that matters, but how much money you make when you're right and how much you lose when you're wrong. Think about what that means psychologically. He's not attached to being right. He's accepted that he might fail, even if he does everything right. He's accepted that the market doesn't care about his effort or his intentions. And in accepting that, he's freed himself to actually execute his process without all that emotional interference. He's not trying to prove anything anymore. He's just doing the work. Then there's ego. Ego destroys more traders than almost anything else. Ego is what makes you think you can predict what the market will do next. Ego is what makes you hold a losing position because admitting you were wrong feels like a personal failure. Ego is what makes you trade too large because you need to feel like a big player. Ego is what makes you dismiss risk management as something only scared traders need. Ego tells you that you're special, that the rules don't apply to you, that you're different from all those other traders who blow up their accounts. The traders who succeed have learned to separate their ego from their trading. Tudor Jones has talked about how the most important rule is to play great defense, not great offense. That's humility speaking. They don't need to be right. They just need to follow their edge. They don't need to feel important. They just need to manage risk properly. They don't need to prove they're smarter than the market. They just need to respond to what the market actually does, not what they think it should do. That kind of humility isn't weakness. It's the foundation of sustainable success. And then there's impatience. This one is subtle because it disguises itself as ambition. You want to grow your account faster. You want to make back your losses now, not later. You want to skip ahead to where the successful traders are without going through all the years of grinding they went through. So you take setups that aren't quite there. You increase your position size before your process has proven itself. You jump from strategy to strategy whenever you hit a drawdown, always looking for the magic formula that will shortcut the journey. But here's what you need to understand about the psychology of top Forex success. The traders who make it aren't in a hurry. Stanley Druckenmiller spent years working under Soros, learning, building his foundation. Bruce Kovner started with a small loan and built his empire trade by trade, year by year. They're not trying to get rich quick. They're building something that will last for years, for decades. They know that sustainable success comes from doing boring things consistently over long periods of time. They know that the market rewards patience and punishes desperation, so they wait. They wait for their setup. They wait for confirmation. They wait through drawdowns. They wait for their edge to express itself over hundreds of trades. And that waiting, that ability to do nothing when nothing is the right thing to do, that's a psychological skill that takes years to develop. There's something else that happens in the mind of a struggling trader that nobody really talks about. It's a kind of magical thinking, a belief that if you just feel strongly enough about a trade, if you just want it badly enough, if you just have enough conviction, then the market will cooperate. This is your mind trying to create a sense of control in an environment where you actually have very little control. You can't control where price goes. You can't control when your edge appears. You can't control whether this particular trade wins or loses. But your mind hates that lack of control. So it creates these little superstitions, these patterns of thinking that make you feel like you have more influence than you do. Top traders have made peace with uncertainty. Ray Dalio built Bridgewater on the principle that you need to understand that you might be wrong, that you need systems and processes that protect you from your own biases. They've accepted that every single trade is a coin flip, even if it's a biased coin flip over time. They've accepted that they will never know what happens next. And instead of fighting that uncertainty or trying to eliminate it, they've learned to be comfortable inside it. They can pull the trigger without needing to know the outcome first. They can hold a position through noise without needing constant reassurance that they're right. They can exit when their stop is hit without needing to understand why the market did what it did. That comfort with not knowing, that ability to act decisively while holding uncertainty lightly, that's a massive psychological shift that most traders never make. Self-sabotage is another layer that's hard to see until someone points it out. You might think you want to succeed, you might tell yourself you're doing everything you can, but watch what you actually do. Do you follow your trading plan, or do you abandon it the moment you feel uncomfortable? Do you honor your risk management, or do you make exceptions when you're emotional? Do you review your trades and learn from your mistakes, or do you just move on to the next one hoping it will be different? Do you protect your mental state by limiting screen time and avoiding or do you sit there for hours watching every tick, draining your focus and emotional energy? The truth is, a lot of traders unconsciously sabotage themselves because on some level they're afraid of what success would mean. Success would mean they'd have to take full responsibility. Success would mean they couldn't make excuses anymore. Success would mean they'd have to show up consistently, day after day, even when they don't feel like it. And for some people, that's actually scarier than failing. So they create these patterns that guarantee failure while maintaining the story that they're trying their best. Top traders have taken full ownership. When Soros broke the Bank of England, it wasn't luck. It was years of understanding, preparation, and the psychological strength to put on a massive position when the setup was right. They don't blame the market, the broker, the news, the liquidity, or anything else. When they lose, they ask what they could have done differently. When they win, they ask what they did right so they can repeat it. They see themselves as the variable in the equation, and that level of responsibility, uncomfortable as it is, gives them power. Because if you're responsible for your results, that means you can change them. There's also this emotional cycle that most traders get trapped in, and it's exhausting. You have a good day, and you feel invincible. You start thinking maybe you finally figured it out. Maybe this is the beginning of your breakthrough. So you trade bigger, or you take trades you shouldn't. Or you stop following your rules as carefully because, hey, you're on a roll. Then you have a bad day, and you crash. You feel like a failure. You question everything. You wonder if you should just quit. And in that emotional low, you either stop trading altogether, missing opportunities, or you revenge trade, trying to force the market to give you back what you lost. This California after wins, despair after losses is completely normal, but it's also completely destructive. Because when you're on that emotional roller coaster, you're not thinking clearly. You're reacting. And the market doesn't reward reactions. It rewards consistency. They've trained themselves to stay emotionally neutral, not because they don't care, but because caring too much about any single trade makes it impossible to execute their process properly. And that emotional flatness, that steadiness, regardless of outcome, is one of the hardest psychological skills to develop. But it's also one of the most important. You know what else separates top traders from everyone else? They've learned to see their thoughts without believing them. That's a subtle distinction, but it matters. When you're in a trade and you start thinking this is going to be a loser, or I should have gotten in earlier, or I should take profit now before it reverses, most traders treat those thoughts as truth, as insight, as something they should act on. But top traders have learned that thoughts are just noise. They're just your brain, doing what brains do, which is constantly generating stories, predictions, worries, and justifications. Those thoughts don't mean anything unless you give them meaning. So when a fearful thought shows up, they notice it, they acknowledge it, and then they go back to their process. They don't argue with the thought. They don't try to talk themselves out of it. They just let it be there while they do what they plan to do anyway. That ability to hold your thoughts lightly, to not be pushed around by every fear or doubt or impulse that arises, that's a form of mental discipline that changes everything. And here's something you might not want to hear, but you need to. A lot of what you think is your trading problem is actually just your life problem showing up in your trading. If you're impatient in trading, you're probably impatient in other areas. If you need to be right in trading, you probably need to be right in arguments too. If you're risk-averse in trading, you're probably risk-averse in relationships, in career moves, in everything. Trading is just a mirror. It reflects back to you exactly who you are under pressure. And the traders who succeed are the ones who look in that mirror and don't look away. Druckenmiller once admitted to a period where he lost his discipline, where he let ego take over, and it cost him. Even the best go through this. But what separates them is that they learn. They adapt. They come back stronger because they're willing to face what went wrong inside themselves, not just in their analysis. You can do this too. Not because you're special, but because this is just work. Hard work, uncomfortable work, but work nonetheless. You have to stop waiting for the moment when it all clicks, when trading suddenly becomes easy, when fear and doubt and impatience magically disappear. That moment doesn't come. What comes instead is a slow, gradual shift. You notice your patterns a little quicker. You catch yourself before you break your rules. You sit through discomfort without reacting, and trade by trade, day by day, you become someone different. Someone who can do this. The psychology behind top Forex success isn't a mystery. It's not a secret. It's just the accumulation of 1,000 small choices to see clearly, to act with integrity, to let go of ego, to embrace uncertainty, to take responsibility, to stay patient, to keep showing up even when it's hard. Those choices, made over and over, year after year, are what separate the traders who make it from the ones who don't. So the real question isn't whether you can succeed. The real question is whether you're willing to do what it takes. Whether you're willing to face yourself honestly, whether you're willing to change, whether you're willing to sit in the discomfort long enough for the transformation to happen, because it will happen. If you stay with it, if you do the work. Not the surface work of learning new strategies or tweaking your indicators. The deep work of understanding yourself and who you become when everything is on the line. That's the work. That's the path. And it's waiting for you whenever you're ready to begin. Like, share, and subscribe, The Trading Mentality, and I will see you in the next video.